So good morning, traders, and welcome to Trading Week Ahead. I'm your host, Ken Calhoun, president of the original Day Trading University and Trade Mastery, coming at you live here on Saturday. Great to see all of you here. As always, all information is for educational use only. So we covered how to fix your trading problems. We'll continue on with this and additional tips next Saturday. The earlier time we looked at your trading playbook, or things that should be the foundation skills that you want to work on as a trader. Know what your edges are, have a daily action plan. Know the difference between charts that work and ones that stop out, and be able to develop an intelligent, integrated plan that makes sense and puts you in the right side of your trades. Anyway, let's get on with it. So big picture, strategically markets are up. Key mid-range support is right here at this cup pattern, right near the 2860. That's an early place. If we lose that support line, I'll be going long in some of the inverse ETFs that I like to trade, like SOXS and TVIX and QID and whatnot. But for now, the market's still in a rally mode. We're still in an uptrend continuation. We're taking out higher highs and higher lows. So as we continue to cycle higher, do keep an eye on to see if the market's able to break that 2900 next week. Okay. From a sector standpoint, semiconductors, oil, and biotechs. Semiconductors, oil, and biotechs. This is oil. I just trade UWT. It's one of the UCO and USO also up there. They all travel together. But UWT I'd been calling long since early January at 1050 for everybody, and it's done well. Congratulations. Plenty of upside in that. The strongest sector right now is semiconductors. And if you look at the chart, you can see why. It's the only sector or industry group chart that's up at 90-day highs that's beating the S&P. So it's a really good chart. This is the semiconductor, the Philly Semiconductor, the SOX index. Looks pretty good, right? So you may want to consider things. For example, I've been trading AMD, has been a favorite. Anybody else trading AMD? I've been calling it in the live room. I made money with it here, but I got stopped out trying to play it yesterday. Did a really nice gap up yesterday, but it just sold off all day. I tried unsuccessful. I got stopped out. I'm very honest. I tell you guys, I make stops daily. I make no bones about it. Great traders take lots of stops. It's like you fail small. The only sin is not getting back up again, right? So you stumble and you take a lot of itty-bitty stops in pursuit of bigger wins. That's part of the game. I tried unsuccessfully to buy the bounce in AMD yesterday, but I did successfully trade the gap continuation on Wednesday, so that was cool. Anyway, that's an example of a semiconductor sector stock. Maybe worth a shot if it breaks the 30 decade value, right? If it gets over, say, again, not a trade recommendation, but I'll be buying it if it breaks over 30, say 30.3 or so. Anyways, if we take a look at our industry groups and our sector charts, next up to bat is biotechs, and you can see the NBI, our NASDAQ biotech, is starting to run up. If we look at some of the other sector charts, nothing's really stands out much. Insurance and banking are just kind of lackadaisical. They're not moving very strongly. You've got to start off with industry groups, and you got to understand VIX is way down in the gutter, right? Which is why TVIX is so cheap right now. Down there 24. We're at support in the VIX. The VIX is at support, so for that reason, you may want to pay attention to TVIX if it does come back to life. But let's take a look at some good charts. So that's industry group coverage. Semis are hot. All right, that's it. Cannabis stocks, not so much anymore. They were okay the week before last, but not last week. So we've had some one thing you have to do is understand where institutional money flow is coming into or out of the stock market so you can capitalize on it. So you start with the top-down look. Stock market itself, the S&P, is the directional move up, down, or sideways. We've had a couple of sideways weeks earlier, but it's finally came back to life. Does that continue? We'll see. The next thing to look at is to drill down into your industry groups, into your business verticals or the sectors to see semiconductors, commodities like oil and gold and silver, what's going on with our other industry groups like insurance and banking. Do a split on the Russell versus the Dow and the S&P for small caps versus large caps. A lot of different ways to slice and dice the market. What we want to do is make money. The way to make money is to follow institutional volume and volatility. The way to do that is to visually scan through the different sector charts and then drill down into the industry leaders, like AMD was a good example, semiconductors. So let's move on. What's our time at? We're at 07. I also use one of these travel. Highly recommend these little Casio alarm clocks. They're great. I use this one for the bedside clocks. I don't like LEDs keeping me up at night. So I use these whenever I travel. I speak at money show events. Highly recommend the Casio. I've got several of these. They're indispensable. And a wireless Logitech gaming mouse. Good stuff. Anyway, back to it. AEZS was a pick for my Small Cap Scans members. If you're not yet a member of smallcapscans.com, you might want to give it a shot. Anyway, and here's why. Here's one of our picks from last week. Here's a pick from my Swing Scans service. And you can see it's been running up nicely from 15 to 21. Now, quick tip. Trading ranges are also... The trading range is the most valuable part of a chart. That's counterintuitive, but it's true. It tells you whether or not the P&L is there, whether or not there's profit potential is a function of how many points of range you have. If this were a chart with a like 20 to 21 range with a really great looking breakout, it wouldn't be worth trading. Okay. If it were something like with a 2 to 30 range, like BPTH or something, kind of risky for a swing trade. So also not worth trading for a swing trade. But if it's in the middle like this, a nice, 14 to 21 7 stick is street talk for a 0.7 point range, that is worth a shot if it takes out new highs. Let me ask a quick question. If you were long in NEO, sounds like a movie character. If you're long this instrument, where would you trail a stop? Let's say you're long 300 shares and you're up a few $100s. But you want to take profit in case next week if the market does a nosedive and sells off and this guy starts to go down, because we see a doji here. I don't know if that qualifies. I don't think it qualifies as a bearish engulfing, but we do have some tails showing. We don't have large green candle bodies. We see some shadows, some wicks, which is troublesome. That means consolidation and uncertainty, right? Which is what doji, which means clumsy in Japanese, by the way. My wife, who's from Kobe, Japan, tells me doji means clumsy, like donchan. Anyway, I digress. Where would you guys trail a stop? This is the portion of the presentation where you type in a number. Wow, I got a lot of answers. And yeah, Micron too. Thanks for the heads up. Yeah, you're absolutely right. MU, that's the other one I trade. AMD and Micron, MU. That's another great one worth a shot. I cover that one regularly in the room. It gapped down a day or two ago, but it had been strong until then. Let's see, 2020, 2010, 2040, 2050, 50, 2030, 2018. All these answers. Hey, Steve. TVIX, I'll cover it in the live room. So if you're in the live room, I've gone for dips, but I've often gotten stopped out trying to buy bounces in TVIX on the way down because I profited nicely on the way up. So I'll still persist with it because it's looking cheap down here at 24, right? So TVIX may be a good play. UVXY and VXXB for bounces. And SOXS, the semiconductor short, has been beaten down on semiconductor strength. SOXS may be good for a pivot if it shows, a hammer, a bullish engulfing, resist a 2 or 3 day high, something that tells you buyers are coming back in finally. But in the meantime, we're in breakout territory. Let's see, you got all kinds of answers here. 20, most of them are over 20. That's good. That's interesting. Often I use a 2-day low rule. The price that proves the trade wrong, and you guys who said 2020, 2030 are absolutely right. Why give up 50 cents or 70 cents profit and wait for it to go all the way down here? Because if you got in, say, here or something, you don't want to get out there. You want to get out up here and at least make some money. So a 2-day low, very valuable strategy in our current market. Got about 8 minutes left, so let me get on with it already. But yeah, good point. Yeah, 2020, 2030, that'd be the correct, that's the correct answer. Another good small cap, and I do cover small caps now in the live trading room exclusively at tradingtheopen.com. And so if you're not yet a live room member, give it a shot. It's only 27 bucks for a whole month with a money back guarantee. So you have zero risk, nothing to lose. And you watch me trade every single day with a live account. So you have my word, it's very valuable. Anyway, IGR, 6.5 to 7. Now, compare and contrast that with AEZS. So that range is only about a 1-point range on a $7 stock. AEZS, on the other hand, has double the range. So it has both double the risk and the profit potential. AEZS in a comparative analysis to IGR. IGR is a slightly better chart pattern, but I'd rather trade AEZS because I want to go for the money. I want to go for volatility. So things that have bigger ranges are more appealing, all things being equal with somehow uptrending charts. Go for the ones with the bigger ranges. The more experience you have, that's what you want to do. Hey, quick tip too, just before I forget, do be sure to join me at the Wealth 365 event next week. My longtime colleague Rob Hoffman, who is also a real money trader, he trades in minis. That's his shindig, and I've got a huge turnout of people who've registered through my link. If you haven't yet registered through my link, you may have registered elsewhere. Do me a solid. If you found today's session valuable so far, re-register using my link, and that way I get some credit in addition to whoever you signed up with. So do register for, I will be speaking. It's a multi-speaker event all next week. They'll be giving away lots of prizes, including prizes from me. And I'll be speaking Thursday for Wealth 365. So do be sure to register for that using the link that I just put in the chat box for you guys. I like if I could see like 822 registrations come through, that would be wonderful. So thanks to all of you for being here. I don't have all 5,500 of the registrants here, but we do have an epic turnout today. So anyway, we're almost at 5,600, so we're going to get there one of these days. So let's go step by step through what else is worth a shot. CNET worth keeping on the radar next week. I'm going to zoom into intraday charts here for a second. I got stopped out yesterday. Made me a little irritated because it had gapped up so nicely and it went down. But this is what we call a dead cat bounce. Boom! Calhoun gets stopped out. But I traded JD successfully. He shoots, he scores. The crowd goes wild. Remember, I got shaken out of 2/3 of the position on the front end, but I made money on the back end. I bought 150 at 30.85. And again, by the way, you should only learn, in my humble opinion, or primarily learn from those of us who actually have like daily or regular proof that we're actually making real money trades in a real trading account. How many of you agree with me on that? Because I think you guys have been lied to, you know, kind of like that movie where everything, it seems like you're in a dream, but that's not the truth of the situation. The truth is darker. The dark reality of the trading industry is there's a lot of people that all talk and no walk, right? They're all sizzled but no steak. They're all smoke and mirrors and magic chart patterns, but they can't make a dime trading. I can make money trading, and I've been doing that for 20 odd years. So anyway, how many of you agree with me that it's important to have validated proof from a real money trading account from the person you're learning from? I think that's one thing that I do, and stops too. I take stops daily as well. I'm very honest about everything. I don't claim to be making millions of dollars or having $8,000 days or having what my web designer said, Instagrams where you've got beaches and sunsets and blue water and all that kind of crap. I don't peddle the dream. I peddle hard. I'm the professor of hard trading reality, and this is hard as heck. And it's all about the math and the numbers, not just magic chart patterns. Only got a couple minutes left. So I'm looking at the computer taskbar with a little tiny print. Anyway, I trade daily, and I like to show you guys examples of both wins and stops, which I do 5 days a week in the live room at tradingtheopen.com. Anyway, the point is, I bought 150 automatic buy stop limit order at 30.85. I got filled with the trail stop. I think it was just 20 cents on 100 shares, and I let the other 50 ride. And sure enough, the 20 share trail stop on 2/3 of the trade got me out with just a little tiny 12-cent profit. Big deal. The remaining 50 shares was the money shot that gave me, and again, it's still all small dollars. I'm not trading, 6,000 shares at a time. And that's because I want to teach you, honestly, the correct way to trade, which is minimal upfront risk. And the only way you do that is with smaller share size. The completely irresponsible and stupid way to trade is what some of these young kids who are pretending to trade with, or they'll do mirror accounts. They'll go long in one account that they show people in a chat room, and they go short in another account simultaneously that they don't show the people in the chat room. That's one of the tricks of the trader. They do front running. There's all kinds of crap out there. If it looks too good to be true, it is. So if you see anybody out there claiming to make thousands of dollars a day every week, it's a bunch of hogwash. Ask to see their tax return, okay? And that'll shut them up real quick. I show everything. So the point is, trade small, trade frequently, minimize your upfront risk. One of the biggest errors in working with thousands of traders I've seen is that traders over leverage and they put too much capital into single trades, and then they blow up their accounts because they eat away big chunks of capital on stops. Kind of that cycle, the death spiral of a trader: small wins, bigger stops, small wins, bigger stops. If you're still doing that, taking very small wins and bigger stop losses, stop the madness. Start focusing instead on a more intelligent way to trade. Anyway, that's an example of a trade from yesterday, a winning trade from yesterday I did. Let me wrap up. So that math of that process is the kind of thing you can expect to get as a live room member at Trading the Open. I like to go over that, and also tape reading. I'm an expert tape reader. I'm the original person who taught the world tape reading on electronic platforms back in the year 2000. It was my first topic as at the time, Online Traders Expo speaker for my colleague Tim Berkwin, who co-founded the expos way back in the day. So I teach professional tape reading in conjunction with advanced 1-minute candlestick patterns in the strongest charts. So anyway, good stuff. I've got to wrap. Let me see. Any quick questions? Yeah, Andy's right. Oh yeah, JD. Yeah, JD was definitely buy mode. It was a good start. Now the thing is, I remember it was sleepy as heck for a while. Remember, all of you are live room members, so many hundreds of people. Remember, I was telling you guys, because it seemed quiet as heck. It didn't even move till after 10:15. It was just parked up there. But the fact that it wasn't selling down is good, and the fact that it did a little minor pre-market gap up is also good. So it's one of those few ones that gapped and finally started to get its mojo on and ran up all day long, which is why I traded it all day long. So good stuff. Hey Lou, you're right. Daily real is real. That's true. Tape reading for day trading only. Yeah, you don't need tape reading for, good question, Mira. Yeah, you don't need tape for swing trades. The main thing on swing trade is slope of the line. So, the tight slope of the line, that's the key. For day trading, the tape is really critical. So, but the main thing is directional volatility and trading ranges. And then use the tape. That's kind of like the broad scan for gap continuations for your watch list. And the tape is kind of the tip of the sword of where to cut it, where to put in the trade. So, smart question. As usual. Oh, thanks, Maddie, saying join Wealth365 via my link now. Hey, Jim, let's see. Where am I going to buy TVIX? Well, I trade it usually daily, sometimes unsuccessfully. Often this last month or so, to be honest. It's often the pattern on this guy is that it usually does a false breakout, a sell-off under support, and then often that's the big recovery. Depending on where it gaps, I'll day trade it like my personal, if it opens up under, yeah, not a trading recommendation, but where I'm going to trade it, if it opens up somewhere, say 24 to 24.5, I'll buy 24.7 and again at 25.20. 25.20 would be the earliest for a swing trade because that's right above a whole number. With the stop loss down at say 24.20. But for a swing trade recovery, 25.20 might be a good shot because that's above prior days low. So that, and again, often you see whole number, see how whole numbers mark out support and resistance. 25 is, well, now immediate resistance, R1, and R2 is up at 26. So lots of upside potential if the market ever sells down. But the market's still in rally mode, so that's why our VIX instruments and VXXB, and I mean it's the same chart, right, are down while we've got a good uptick in the S&P. So mainly we need to be directionally in sync with the market. So probably a better question is, where would I buy TQQQ? And it's gone up a lot lately. I've got to run. I've got swing scans coming up momentarily. And again, for swing scans members, I've got the alert for that. It's getting a little pricey though. I don't like to trade things over $50 a share in general. My sweet spot is like $15 to $35, $15 to $40. I do trade the cheap stocks on occasion. I'll day trade them usually. I'll swing trade anything up to around $40, $50 a share. Day trade this if it moves. But what do you notice? Final thought. So I really have to run right now. What's a warning sign on this TQs in terms of a hint, the pattern of the candles? What are the candles telling us in TQQQ that's a warning sign for the market may be tired and it may be ready to sell off? What's the evidence? For 10-year CSI, I like the show CSI Miami. That's pretty good. I like Blue Bloods. I like Police Procedurals. FBI is okay. I like SWAT better. The new SWAT series is pretty good. FBI is okay. Orville is great. The sci-fi series with Seth MacFarlane. I like that. I like The Blacklist. That's great. I like Shark Tank. Anyway, problem with this chart is the candles are melted, or they're flat, and they're doji-ish, right? We got a doji 1, doji 2, doji 3. They don't know what the heck they want to do. They're uncertain. And so when you have uncertain candles that are getting compressed and flat, and large tails, or large wicks up and down, that tells you the party may be over and we may be ready for a drop. So that's a smart question from Jim about where to buy TVIX, because it may be good for a lot of money on the upside if this slowdown we're seeing in terms of the height of the candles, the volatility of the candles is starting to get compressed. So that tells us the longs are getting tired and uncertain. So it's a good time to tighten in. My final tip is, if you're swing trading anything now, it's a good time to tighten in very tight trailing stops, because the market may tank and drop any minute now. So be ready for it. Be sure to join me at tradingtheopen.com. You guys have been amazing. I got to run. I got swing scans coming right up. So thanks for being here, and I'll see you guys next time.